My name is Craig Slayen, and I'm a principal at Winship Wealth Partners. Today we're discussing the importance of rebalancing your portfolio. So, why is rebalancing necessary? Rebalancing keeps you as the investor disciplined while helping to maintain the overall risk in your portfolio. See the example portfolio in this chart. An investor starting to invest in 1994 chose a 50% stock, 50% bond portfolio. The chart shows how much the portfolio drifted over the years from this original target allocation. Without rebalancing the investor's portfolio, the original target allocation of the 50-50 shifts all over the place, you can see, from 1994 to 2012. Without the rebalancing, the portfolio is put at risk. The idea of rebalancing is simple. If the investor chooses a portfolio of 50% stocks, 50% bonds, it's important to stick with that same target allocation throughout the years. We recommend that in order to effectively rebalance your portfolio, you need to have some type of systematic process. So how to rebalance your portfolio? To keep track, to see if your portfolio's target allocations change, you need to set ranges on the original allocation. For example, for our larger allocations, we set them at -3% to +5% of the particular asset allocation. When the portfolio hits the level above or below that mark, we then rebalance the portfolio back to the original allocation. When you're setting these ranges, you need to consider volatility of the asset class, correlation to other asset class, and the size of your original allocation. So how often should you be rebalancing your portfolio? Ideally, an investor would rebalance their portfolio every day, but that's impractical. At a minimum, I would suggest that you rebalance your portfolio once a year. At Winship, we review our portfolios on a constant basis and evaluate how far from the target allocation has our portfolios drifted against those thresholds. It usually ends up being rebalanced once a quarter. Our goal is to always be evaluating the portfolio against those original thresholds, and you should as well. A few other tips on this. You should also be rebalancing when money comes out or into your portfolio. So when new money's coming into the portfolio, you get a raise, you should be placing that money in the under-allocated asset classes. Or let's say you're making a distribution, possibly to cover living expenses or a big tax bill, then you should withdraw funds from the asset class that is over-allocated or that has too much exposure. So what's the big challenge of rebalancing? Well, creating some type of systematic rebalancing is key because it is emotionally challenging to rebalance a portfolio. Okay? So think about it. What happens when the portfolio needs rebalancing? Money actually comes out of an asset class that has been doing great, it's been doing really well, and goes into an asset class that has been doing poorly. And this is very, very hard for most investors to do. So the big benefit of rebalancing is that it keeps your risk allocation in place and it forces you to actually buy low and sell high. It keeps you disciplined as it takes the emotions of investment decisions made by fear as well as the ones made by greed out of your investment process. So remember, in order to be a successful long-term investor, rebalancing and this discipline has to be a part of your investment program. So that's it for today.